Hey guys, Justin from Deep Dive Stocks here with another data dive. Today we're going to be looking at Apple. I thought Apple would be an interesting dive to look at the data because it recently just had its anticipated event where it was going to unveil the new products, and it has a new phone, or the same iPhone version 36 is coming out, and I think a lot of people in the market were expecting a jump in price, especially with how beat down the stocks are. It seemed reasonable that Apple coming out with new products, new and improved, that the stock should jump up. But as we saw, that isn't quite what happened with the stock price. And today, we're going to look at the data to see how this was pretty foreseeable, albeit unexpected or unfortunate for Apple. So we're going to start as usual with VoEx. We're going to go backwards in time first. So this is from the 3rd, so from last week. And the first thing to notice is that the VoEx trend fell into the propagation zone early in January. Typically, when a stock's VoEx falls into the propagation zone, this is indicative of future and persistent declines in price. And for the most part, Apple has been doing just that. What is interesting about Apple is that it did have a little bit of a bump in about the end of January, the start of February. But notice that VoEx trend continued, not only being in the propagation zone, but descending deeper into the propagation zone. And this was accompanied by these large daily VoEx spikes. When VoEx daily spikes occur with like a modest increase in price, it indicates that that price action that is provoking those VoEx spikes is producing too much instability on the stock. When a stock is too unstable, it will typically fall, or it will go towards where stability was last found, which usually is down. So we see that VoEx fell into the propagation zone. That's indicative of future declines in price. Even during a little bump in price, we had these massive VoEx spikes, which are themselves indicative of future declines in price. And VoEx is still, even though this is from the 3rd, we're going to see it's the same even for today's data. Its VoEx trend is still in the propagation zone. Again, this is statistically relevant for continued depreciation in price. And so that's VoEx, but there's some pretty cool stuff going on in the options field on Apple, and that's really what I wanted to point out with this video. So if we go down, we pass the snap graphs, we're going to pass the expected price range graphs, liquidity, shorting, all that fun stuff, and we're going to land right here at the options. Notice on the 3rd, a large amount of calls were opening, and a decent amount of puts. Now, if you might have an options flow, or you subscribe to a service that gives you an options flow. And in any case, if you saw this net flux of calls on Apple and you know that an earnings event or a product showing event is coming up, you might think, hey, this is a really bullish action. This is indicating that a lot of retail investors are purchasing calls because they want to benefit from the surge in price that's probably going to happen. And normally you'd be wrong. The majority of calls that get placed throughout the market are retail short. But in Apple's case, we see that if we come down here to the delta values, the delta from the day before was 402,000, and then on the 3rd, the delta closed at 171,000. So this means that a large amount of short delta was added to the stock. Well, what else was added to the stock? A whole bunch of calls. So what type of calls add short delta? Well, dealers short calls. So in fact, people were purchasing calls in anticipation for this event. There was a bullish outlook. So why did the price fall? Well, we'll find out. So if we go to the 7th, same, we're going to fast forward to the 7th, same thing with the VoEx trend. Nothing really has changed here. VoEx is still indicating persistent instability. A few days have passed. Liquidity is diminishing on the stock. Nothing too crazy. But again, we see a healthy amount of calls are opened out of the money. So about 110, 120% increase in calls, and a modest 150-some% increase in puts as well. What happens to the delta? Well, by now, so many calls have been opened up on Apple that Apple is now officially in the gamma squeeze. So the delta from prior, from what was the day 7th. The 4th, delta was negative 477,000. It's now negative 832,000. And this is probably because, again, calls are being added and with this bullish outlook after the product event. And what's interesting is, even though this large amount of puts was opened up, and if we assume that the majority of those puts are retail short, which means dealer short, so a lot of retail investors are purchasing these puts in the event that the price doesn't go up, but rather it goes down, then these would add long delta to the stock. And even if we presume that half of these are long delta, we're still being overshadowed pretty significantly by the short delta being added by the calls. Basically, there was a really long way of saying people were pretty bullish on this. I think there was a lot of optimism and a lot of hope surrounding Apple's event, especially with the market at large right now. Everything's red. I think a green event on Apple would have maybe lifted people's spirits, or maybe the market knows about something Apple was doing that I'm not aware of. It's probably the case. But the problem is that Apple had played itself. Stocks in a gamma squeeze invariably almost always go down. It's the nature of the beast. And when the stocks go down, the gamma squeeze typically gets worse, and then it enters a recovery phase, and then it starts recovering. But Apple's gamma squeeze was pretty new, and it kept getting worse. So if we come to today, post-event, it's not surprising that as the gamma, so this is the price, the expected price range. We'll come back up to the VoEx. We see that it dipped in price. VoEx is still headed lower into the propagation zone, which is again indicative of future declines in price. We'll do a full review now. So the snap grabs are neutral, but leaning to negative. So we look for where the crosshairs are. Here we see the crosshairs are negative again. So this is the 1 day. This is the 5 day. We have a negative returns expected for the 10 day. These are 10 trading days, so that would be 2 weeks. And then we have a neutral to bearish outlook on the 20 day or the 1 month time frame as well. The price dropped way below the expected price range band, which is pretty on par. It tracks for stocks in a gamma squeeze. They typically move way more than the market is expecting them to, precisely because of the mechanisms behind the gamma squeeze. But again, one of the biggest misconceptions is that gamma squeezes push stocks up, but the data show that the large majority of gamma squeezes push stocks down, and that seems to be exactly what happened here. Again, maybe before the product event, a whole bunch of calls were opened up again. A good amount of calls were opened up as well, but these calls that opened, look at that delta. We went from negative 832,000 to negative 1,380,375. There's a lot of short delta on Apple right now. And what that means is every time the price goes down by 1 point and IV goes up by 1 point, 1.3 million shares have to be sold. That's pretty significant. So today, for instance, we saw about a 2 point decrease and a 2 point increase in IV, so that's a 4. So right off the bat, we'll say 5 million shares have to be sold in order to hedge all of these options. So now we can understand why typically gamma squeezes push stocks down, because, well, that's all. That means 5 million buyers have to enter the market to just keep the price the same. Are there that many confident buyers in Apple right now? Who knows? And so the irony is that all of the bullish outlook, it seems, on Apple with the upcoming product event pushed Apple to a gamma squeeze. The gamma squeeze did what gamma squeezes do, which is it pushed the price lower. On top of that, we see that VoEx is very clearly still in the propagation zone, and it's digging itself deeper. Something that doesn't, as we can see, doesn't really happen too often on Apple. Even 3 times in the past 2 years is honestly pretty eventful for Apple. It's been some turbulent times. So we got VoEx digging deeper. We got a worsening gamma squeeze, and the snap graphs are interpreting all of this as negative returns, and that's what the data suggests as well. and that's Apple. So that's why Apple's price dropped, it looks like, and I wouldn't be too surprised if it continued. So happy trading. Thank you. Thanks for watching this video. If you liked it, please like, comment, subscribe. Let me know how I did. Let me know if there's anything you want me to cover more. If you want, I would definitely recommend reading more material on the website, deepdivestocks.com. As well, you can get the Gamma Gainers newsletter. You can sign up for that right at the website as well. And happy trading, guys, and good luck. See ya.